Once again, the bond market, the bond vigilantes, as they are sometimes called, are screaming. They are throwing a fit. Folks, as Ray Dalio has really indicated the last couple of days, you need to realize as just an American consumer, an American investor, that the bond market, specifically the risk-free rate of return on the 10-year note, is what all risk assets are priced in. And what we have seen, if you've been paying attention over the last, let's call it 4 weeks, is the bond market or the bond vigilantes have been very boisterous. What do I mean by that? Well, if you go back in time, just about 4 weeks ago, the first time the bond market really showed its displeasure was with the rollout of the tariffs on Liberation Day. Again, the administration was going in one direction. The bond market didn't like it. The bond market took rates higher, and it forced President Trump, Scott Bessent, and others to change path and to issue the 90-day pause. The bond vigilantes did that. Number two, the next time the bond vigilantes got in front of something was China. They didn't like what was going on with China. And they again took rates higher, forcing President Trump to create a 90-day pause. Now we have another one. And this one's going to be a problem. President Trump, the administration, is pushing through this big, beautiful bill that by all accounts will be adding $5 to $7 trillion to our deficit. Certainly not what was advertised as deficit reduction and all of that. And the bond market is having enough. There was a horrible 20-year auction yesterday, which took the 20-year note over 5%. The 30-year note is approaching an 18-year high. Think about that. The 30-year note is approaching an 18-year high. And this is not good. Ray Dalio put out a post or a video. I don't know. I saw it this morning. It may have come out yesterday. Basically painting a picture. And that picture is rather ugly. Basically, what is going on right now is the bond market doesn't like this Trump tax proposal or big beautiful bill or whatever we're calling it these days, because we have no deficit. There's no deficit reduction, right? So what the bond market, the bond vigilantes are doing are basically forcing rate hires. And where this gets ugly is you're going to approach a point in time in the economy where rates are going up and the Fed is going to have a choice. The Fed can either let rates go higher, which destroys the economy, housing, autos, small business, private equity, right? It just destroys the economy. Recession guaranteed. Or they could choose the other option, which is to print money. The Fed could potentially print money and become the buyer of last resorts. They could become, once again, the largest buyer of treasuries. Money printer, go burr. This is the warning that Ray Dalio is sending out. He is letting you know that he thinks the Fed isn't going to have a choice except to print. And if you don't connect the dots, if the Fed does print inflation 2.0, asset inflation 2.0, dollar depreciation, it gets ugly and gets ugly quickly. So it will be very interesting to see where the bond vigilantes take this. We obviously now have mortgage rates solidly over 7%, maybe going higher. We have the threat from, the Fed having a choice. Do they try to reduce rates or let them go higher? Never boring, that is for sure. So again, it should be very interesting. I just saw a post from U.S. House Speaker saying the tax bill is supposed to be done and voted on by July 4th. So again, right around the corner. Lots of things to talk about here. Let's talk about our school community. Again, we have a school community. 8 a.m. Sunday, we are going to have a special guest, Ty, TYLG, is going to come on, talk to us. He's been investing in real estate for 30 years. He's offered up some free education in school at level 2. And he said, hey, let's do a session together. Loved what you and Adrian did last week. So again, he will be there inside school on Sunday, 8 a.m. So I have to post that link, but it will be there soon. Bitcoin, I don't know if you're tracking Bitcoin, but I think it hit 111,000. That is an all-time high. I believe Bitcoin is running because they see the potential of the Fed printing. If the Fed prints, decides to go money printer, go burr, scarce assets like Bitcoin will scream higher. And it'll be interesting to see where this goes. Don't know if you saw this, but the Senate, in a surprise vote, passed unanimously. That's pretty cool. We actually had some bipartisanship. The Senate passed unanimously No Tax on Tips Act. It was estimated that if this goes into force, it will impact about 4 million workers, is the estimate. Now, there are some income thresholds and some other stuff. Obviously, it's only passed, I think it was the Senate, so it has to go to the House and then the president. But it was interesting for me to see bipartisanship get something done. That's pretty rare today. So no tax on tips passed the House, apparently. Or, yeah, passed the Senate. Sorry, Senate. We did get some earnings yesterday. Zoom, the Zoom video beat top line, bottom line. Snowflake beat top line, bottom line. They raised guidance. I do have a question about Target. Obviously, Target missed pretty bad. Sometimes when companies miss, it's because of execution. Sometimes they miss because their consumers are strained, right? Demand destruction. So I'm curious what your thoughts are. Did Target just execute poorly? Or is Target a sign that demand destruction has already started? Let me know in the comments below. I suppose it could be both, but usually there's one larger catalyst over the other. Looks like Amazon has announced a pretty cool thing with Nike. If you like your Air Jordans like I do, looks like Amazon is going to acquire Nikes directly from Nike in something they haven't done for years. So we'll see what that's all about. We did get some updates from Mike Simonson. This is actually the last update for Mike Simonson. Apparently, he's leaving Housing Wire. He is going to be doing something else very soon. He promised an update soon. But in a shout out to Mike, this came out on Monday. I hadn't talked about it till today. Active inventory is back to 2019 levels, aka more supply. 768,000, up 1.5% week on week and 33% year on year. We had 90,000 new listings. That's a big deal. That's actually up 8% year on year. We also had 74,000 new pendings. That too is up 8.3% year on year. As for prices, flat year on year. Prices average 400K. So we'll see where it comes out in the wash because those obviously are pendings. Some good news from David Sachs, apparently in the administration, the Genius Act. The Genius Act is some legislation around stable coins. The reason I'm talking about that act today is it might be the answer, right? Earlier, we talked about the potential for demand to be falling in the treasury market, right? AKA the bond vigilantes. Well, I don't know if you guys know this, but a lot of stable coins, they buy the U.S. treasuries. So again, according to David Sachs, stablecoin legislations could unlock trillions, that's with a T, folks, trillions in demand for U.S. treasuries. Just in time as rates jumped. Think about this, right? As we open the show, we've talked about the poor auction of the 20-year. We've talked about the 30-year at an 18 or near an 18-year high. What if the Fed is not the last buyer of last resort or buyer of last resort? Instead, what if we unlock stable coins to simply start buying treasuries? Maybe make treasuries the default asset for stable coins, something like that. Again, this might just be, I don't know if the timing is lucky or perfect or whatever, but just in time for falling demand, we may have unlocked an answer by having stable coins buy treasuries. Interesting, at least, to think about. Lastly, we'll go through some just raw material here. We got weekly claims. So it is Thursday. That came in at 227. Again, not concerning. It was 229 last week. It is concerning to look at continuing claims. Continuing claims came in high at 1.9 million, is expected to be 1.88. I have long thought that weekly claims are not going to be the problem this time. Instead, it will be duration. I think it's going to be a duration risk. Hence, continued claims are more important. We did have an accountability group the other day in school community. Shout out Frank. They talked about contractors. Again, we got a lot of contractors in the community. Talked about slab versus crawl space for foundations. Talked about self-management for out of state. And also talked about mobile home investing, which is interesting. Again, these accountability groups, there's now seven you can choose from. Find the topic or the time that works best for you. And then we had Fed President Waller out talking. He basically, these are things, what I got, 5 notes. If the economy gets back in good path, it could reinvigorate demand for U.S. assets. Again, folks, I think we are in a sell the U.S. market. Now, again, it's not sell entirely. It's reallocate. We are reallocating out of U.S. assets at some level to other places. Next, everyone expected more fiscal restraint in the tax bill. I think this is a shout out to the bond vigilantes taking over and saying this tax bill sucks. Next, I believe tariffs are a one-time impact. This is really definitions, right? When we think about inflation, inflation is about a series of rising prices. And what Waller is saying here is tariffs will be a one-step function, hence not inflationary. It's just gobbledygook definition stuff. It is going to raise prices. It's going to be a problem. I actually think it will lead to more demand destruction, but we will see very shortly. Firms are pausing, but not canceling plans/projects, which I thought was interesting. Let me just tell you, it really quickly can go from pause to canceled, as it could go from pause to restart. That is fair. And then finally, if tariffs settle down, we could cut later this year. Again, I think the Fed is being remarkably clear that June and July will be no cuts. But again, they're talking now October, November, December, somewhere in that period. Folks, at the end of the day, I hope you enjoy these daily financial news. I do want to give a shout out to Steadily, the sponsor of the daily financial news. You can see a link in the description. They are Landlord Insurance. If you are a landlord, it's always great to get a comparison quote. If you are new to this game and don't have rentals, I suggest going there and putting in the address you're looking at, just so you know what insurance might cost. Folks, check them out. I appreciate their support. Thank you. Take care. Talk on Sunday morning. We'll talk again Sunday morning. Bye.